I wanted to make this video today because we always get questions about insurance pricing, how it's worked out, and in particular why insurance premiums change over time the way they do. So with most products that you can think of, the price over time will more or less go like this. It just rises in a straight line. But insurance is very different to that. Insurance goes in more of a wavy cycle. Eventually will increase over time, but it goes up and down and up and down and up and down. So this is what we call a hard and a soft market. And there's a whole bunch of factors that influence that people don't understand behind the scenes. So I guess there's this understanding that an insurance company takes your premium, and then if you don't make a claim, which a lot of people don't, they keep the money, and then that's the end of the story. They make a big profit and happy days. But in actual fact, the costs that go on behind the scenes, it's a lot more complex than you might think, and they probably run a lot thinner than what you might think they do. So I'll give you some insight now into why the insurance market fluctuates the way it does. So the biggest deciding factor for that is obviously how much money an insurance company is making, right? So we'll call that dollars. Now, the factors that then go into how much they're making, obviously the biggest one is how much premium they're charging, which is our concern for this discussion here and now. And then what causes them to charge a certain premium they charge is obviously one of the biggest ones is the claim situation. So how much money are they paying out for people actually claiming on this insurance? How much competition is there out there in the market? How many other insurance companies are offering the same thing that they are? And then the expenses that they have. And then another big one that a lot of people don't realize is the investment return. So they invest the money that they receive in premiums, or a large portion of it, and then they basically use that as their profit for a lot of the time. So if you're trying to work out, well, why does the premium fluctuate the way it does, it's important to realize which of these factors is going into it and where it goes. So if I was to map where we are right now in the insurance cycle, I would say we're about here. Insurance premiums have been increasing for a little while, but the word out there is that it's got a little while to go yet. We followed a very, very soft period where the prices were very low, and now we've sort of come through that, and they've been really hardening over quite a period of time. So what's caused that? Well, all of a sudden, insurance companies have been competing with each other in very low premiums and all the rest of it. And then all of a sudden, the claims costs really started to increase. We had some massive natural disasters, both in Australia and across the globe. And then all of a sudden, insurers realised, well, hang on, we're not making any money here. We need to get our profit back up. So they start increasing prices. And then all of a sudden, you know, they're not making as much money on their investments. Claims keep going up. There's still not as much money in the pool. And so they do what they call remediation, where they keep trying to remediate or fix their book and get it back to a level of profitability. They chase it all the way up, and then all of a sudden, they get to a tipping point, which will happen at some point in the future. It's pretty inevitable. And then they realise, there hasn't been too many claims for a while. We're making plenty of profit now. And they think, well, how can we grow our business? So they go out there on the acquisition trail and they say, well, if we become really competitive on price, then we'll be able to lure lots of customers to us. So one insurer is always the first to go, and they say, well, we'll start beating everybody. They start taking all the business from everybody else. Another insurer goes, well, we're going to have to compete too. We'll undercut them. They come to here. Then another insurer goes, and another insurer goes. And before you know it, the market's just chasing itself down into a tailspin until inevitably natural disasters happen again, as we always know they will, and then the market has to go back up again. So insurance companies don't seem to learn from this cycle and just price a little bit more consistently over time. It just seems to be one of those inevitable forces that happens. There are some that try to sort of avoid it to a large extent, but it just seems to be virtually impossible to do if you do want to compete. So that's really why at a macro level, insurance premiums increase or go in this cyclical up, down cycle over periods of sort of 5 to 10 years. But there's probably a whole bunch of other factors which cause your individual premium to change. So if you want us to have a look at your circumstances and get a bit more of an understanding as to why it happens for you, then feel free to get in touch and we'll be happy to help you out. Cheers.